investors of the month. And then in the all branch games specifically, we'll have prizes for that. So make sure everyone is registered in both of those for the investor app. So if you want to take a minute, and if you're not already, go ahead and scan the QR codes and make sure you're doing that. Yeah, go for it, Nathan. Okay, so today's presentation is going to be on stock ratios. So there's 3 types of stock ratios we're going to be discussing today. So as a general overview to what ratios are in investing, we use stock ratios specifically when evaluating stock earnings and growth, because if we're just looking at what's happening right now with the stock, well, for certain companies, they might be increasing at a rapid rate. For certain ones, they might be decreasing, but that's not necessarily the case for the future. So we use stock ratios as kind of a benchmark to estimate what's going to happen to the company and to the value of their stocks to make smarter investments. So if you want to go into the next slide, this is a quote from Walter Schloss, and the quote says that be aware of the level of the stock market. Are yields low and PE ratios high? PE ratios are one of the 3 ratios we're going to talk about. And basically the purpose of putting the quote there is just to show you that like top value investors look at these fundamental ratios to make smarter investments. So the 3 ratios we're going to be talking about today are PE ratios, PEG ratios, and ROE or ROI ratios. So I guess I'll go ahead and just cover the first one then. So if you want to go into the next slide, Nathan. So the first type is a PE ratio. This is called a price to earnings ratio, and it is the ratio for valuing a company that measures its current share price relative to its per share earnings, or the EPS of the company. And so the price to earnings ratio is also sometimes known as the price multiple or the earnings multiple of ratio. So essentially what the PE ratio does is it divides those 2 statistics that we can actually find, and it creates that prediction that we look to in the future. So if Nathan, if you want to go into the next slide, we can see here that they're calculated in a pretty simple way. So what you do is you take the share price that it's currently at, let's say it's at like $20, and then you divide it by the actual company earnings per share, which you can also find off certain companies' websites or the stock markets itself. And then you're going to get a ratio. And so the ratio is used for valuing companies and to find out whether they're overvalued or undervalued. So on the graph, for example, on the S&P 500 PE ratio, there's about an average line, and you can see the PE ratio fluctuates quite a bit. So it'll show you if it's above, it's going to start to get overvalued or undervalued depending on where the share price lands in that specific instant. So this kind of goes to show that the PE ratio is a good estimate for what a company's behavior is like, considering a lot of these shares are pretty volatile, and they give you a good estimate as to what the share might look like in the future, or certain peaks it could hit in the near future as well. And so it's important to be able to calculate these ratios to help you understand the value of the overall market and that specific share in the market. I think the next slide is also about PE ratios. So this one, this is just an example of the PE ratio of like a specific stock. As we can see here, the PE ratio has been decreasing in later years. So as we went along, the PE ratio dramatically declined if we look at the blue line. And so this could be an indication that the stock is underpriced. So it actually might be a better investment right now because they think that the value of the stock is much higher, but the PE ratio is decreasing, which means the value of that, or the price that that stock is sold at, is probably a lot lower. So this could be considered a smarter investment, or at least a more appealing investment. But we also need to remember that low PE ratios don't always indicate that they're underpriced. This is just an example of where, because the PE ratio is decreasing, we determined that the value of the stock might have been a little higher in the market. And so this would have been a more appealing investment. Nishal, you want to go from here?
Yeah, so the PEG ratio is basically a valuation metric for determining the relative trade-off between the price of a stock, the earnings generated per share, and the company's expected growth. So this can be calculated by dividing the price to earning ratios by the earnings growth rate. And the PEG ratio helps value a stock's earnings growth, and it's a good indicator of the true stock value, but also does have higher volatility. This can be used and calculated easily to supplement the price to earning ratios. So the return on investment is a ratio between net profit and the cost of investment. The return on equity is a measure of the profitability of a business in relation to the equity. And these values help understand relationships between profits, cost, and profitability of specific companies. So return of equity is essentially, it measures how management is using a company's assets for profits. It essentially is the annual net income divided by the shareholders' equity value. It is very commonly used by investors and depends on industry standards. And here we have return of investment ratios, and it's essentially the earnings before interest and taxes value divided by the capital employed. And the return of investment can measure the efficiency of specific investments, and it makes it very easy to compare different values and can be adjusted to multi-year investments. So to summarize, these are the 4 ratios that we discussed in today's meeting. And remember that these values are typically not calculated by hand and are available online. The important fact is to understand how to interpret these values and implement them in your trading. So the investor of the week was Rishi. I'm not sure if he's on, but congrats to Rishi. So if any of you guys are interested in becoming an officer, please scan the QR code or type in the link and please apply.
All right, guys. Thank you all for presenting. Should be your initial. Just want to say one quick thing on policy. As y'all have probably heard right now, some kid kept interrupting. So from now on, we just like everybody, you should have already been doing this. Make sure you have your first and last name there. As a rule, we're not doing any other sort of names. I know y'all like to play around sometimes, and fun is good and all, but in this setting, especially since we're using school resources, I was notified that we have to use our first and last names when we log on. And I know most of y'all are doing that, but just to be clear, and if it wasn't already made clear earlier, please sign in using your first and last name. If nothing else, we hope to see y'all back in right about 2 weeks. Check your remind, and we will update y'all on the next meetings. Thank y'all for coming today. Have a good evening.